Hello, everybody. This is Jake Stenziano, host of the Wheelbarrow Profits Podcast, here with my co-host, the multifamily mentor, the coach, the chef, the father of six, the best-selling author, the G-Daddy, Gino Barbaro. Gino, how's it going?
J-Love, I'm doing good. How you doing, bro?
Always making it happen today. Hey, we got another G-Daddy on the show, and if you don't know him, that's his fault. His words, not mine.
My fault, man. My fault. My bad.
Our guest today is New York Times best-selling author of The 10X Rule, multifamily real estate beast. I thought that was me. And godfather of sales. Ow! Gino, this is going to be good. You ready for this?
I can't wait, bro. I'm dying right now. Let's get this thing going.
All right, without further ado, Grant Cardone, welcome to the show.
Hey, great to have you. Great to have me on the show. Yeah, I guess.
welcome. Hey, so I'd like to take it back. I'd like to find out what year you started investing in multis and why you made it your investment vehicle of choice.
Okay, well, so, I mean, I probably started investing in, before I ever financially put any money in apartments. By the way, that's the only thing I buy is apartments, okay? And we'll talk about some of the other vehicles I would expect. But I think houses are a terrible deal. I mean, I learned from personal experience that a house investment is, I know everybody believes you got to have a house and you got to buy a house. It's one of the single dumbest investments you'll ever make in your entire life. I would rather pay more in rent, okay, than have a mortgage that would supposedly save me money. But I started investing in multifamily when I was, I guess, 28 or 29 years old. I didn't buy anything until I was 34. But I was looking every weekend. Okay, I bought one house for $78,000. I rented it in Houston, Texas. I rented it. I was all excited, guys. I mean, oh my God, I'm making money, man. I was freaking out, man. I remember these two chicks that I rented the house to. It was a little 2-bedroom house. I rented two sisters. I'm like, oh my God, I'm making $100 a month, man. I was pumped, right? And then they moved out at 9 months, and then I was 100% vacant. And I got terrified, dude. First month was one thing. Second month, third month, I'm freaking losing my mind because now I'm losing $600 because I'm paying the mortgage, right? And I realized then, I said, I'll never, ever buy a single rooftop ever again. It wasn't rental property that was the problem. It was I was too dependent upon too few customers, which is exactly what my other businesses had been built on. I needed lots of customers, not a few. Because if you lose that one great customer, let's say Microsoft or Google or Facebook, that they're giving you all this money, dude, the problem is you're dependent upon them.
I agree.
My friend Steve Harvey, man, he's got a radio show, a TV show on Sunday night. He is not dependent upon one source of income. Same thing, and that's why I like multifamily.
Well, isn't that the reason you want to have, the more customers you have, the more people you can service, the more money you can make. So if you have 30 single family homes where you're running around every neighborhood, trying to collect 30 rents, when you have 600 or 700 apartments like we do, it's just the economies of scale, and it's so much easier to manage, and it's, you got that income coming in. So the more people you can service, the more money you're going to make. And that's what entrepreneurs, I think, forget. I mean, I had one restaurant, bro, and that one restaurant was killing me. I can only service the people coming in that one location. And, when you got a dad who's, whipping you and saying, old school, you got to stay there, you got to live and die by it. It kills you. You have that mindset, and you got to get out of that mindset. There's that fear factor. And it took me a while. I had to meet this guy, and, he pulled me out of the doldrums. And he said to himself, he said, guys, we've got to scale up. And that's why multifamilies are just powerful. And the ability to scale up is what, is what's attractive to Jake and I.
Yeah. And I didn't know all that. I didn't understand the leverage. I didn't understand paying down debt over long periods of time. I didn't understand expenses or management, nothing. Okay. I just knew. And by the way, I've never read a book on real estate. Okay. This is my first read.
You got the only one you need.
I'm surprised. You got a lot of knowledge in, huh?
But dude, I'll tell you, there was a book that I bought. It was called, what was the name of that book? Building Your Real Estate Dynasty or Empire.
Uh-huh.
Y'all know that book? It's black and gold, Building Your Real Estate Empire.
You've read every real estate book. How do you not know that one?
I haven't read that one, so.
Dude, I didn't read it. I bought the book, never read it, but the title inspired me. I mean, today I own almost 4,000 apartments. I want to go to 40,000. That's my goal right now. I want to 10x awesome. That target. So, even though I never read the book, How to Build a Real Estate Empire, the cover gave me my money's worth.
That copy, it got you.
Yeah, exactly.
So great. We like to buy mom and pop apartments. That's what we focus on. These properties that have no systems, nothing in play. You know, guys who don't do credit checks or anything. What do you focus on when you're looking at apartments as far as value adds, as far as niches?
Yeah, well, my niche is tertiary markets. Tertiary means for your
elaborate on that. Some folks I think are gonna
yeah. So there's primary markets. Miami would be a maybe Miami. Yeah, Miami would be a primary market. Miami, New York, Chicago, San Francisco, Dallas, Houston. These are primary markets. A secondary market, let's say if you're in Houston, a secondary market to Houston would be maybe Katy, or San Antonio would probably be a secondary market. You know, things change as things get really good. Then shit, all of a sudden, man, you could have like El Paso could be a primary market because everybody gets hallucinating on positivity. And then a tertiary market would be like St. Lucie, probably a little town you've never heard of. I focus really on tertiary markets, third kind of in tier, where I don't have a lot of I don't have a lot of competition from big equity firms that are chasing deals in Miami or Chicago or San Francisco or the major markets.
So I'm guessing, and don't let me put words in your mouth, but you're getting your price per unit less because you're going to tertiary markets. There's less competition, and because you're getting your price per unit less, you're getting better returns on your investment. Is that fair?
Yeah, maybe. I mean, I don't know. I don't know how to measure that really. I mean, I can tell you the mistakes that I've made. You know, the first deals I ever bought was in San Diego, California.
How long ago was that?
1995. The housing bust had just happened. The credit and loan, the savings and loans bust. Literally, there was more U-Hauls leaving the state of California than going back into California. And I had been shopping real estate for 3 years prior to that, or 4 years prior to that in Houston, Texas. I moved to California, and I didn't buy anything while I was in Houston. Every weekend, I would shop apartment buildings. I wore out every real estate agent in Houston. They all said I was a flake. And I was, dude. I was a flake. There was no way I was going to buy anything.
We've been there.
I didn't have enough money. And I think you guys talk about this in your book about, hey, make sure you know all the agents because they're really important. Well, I burned them all out. They all hated my guts. And they all said that I would never buy anything. I moved to San Diego, and basically those 4 years in Houston was an experiment. I was learning without buying. I was learning what would have worked and what hadn't. The reality is, in 1995 or 96, I could have bought everything that I looked at in Houston, and I'd have made money.
Yep.
So when I moved, and I could have kicked myself in the head for not buying anything, but I didn't have enough money, and I didn't have enough courage, and I didn't have enough knowledge. So when I got to San Diego, I promised myself, I said, if I ever see this market again, you can see something. After you look at enough property, as you guys know, you can see and feel something happening. And I was driving in downtown San Diego, and I was like, dude, this is it. I feel it. The same thing I felt in Houston when it was good. So I bought my first deal in a place called La Mesa. It was 38 units. That's typically a big first deal for a guy, you know. And it was a deal a guy paid. I think he paid $4 million for it when he bought it. I paid $1.9 million. I put $350,000 down. It was a per pound based on what you're saying. It was per unit. I thought it was cheap. I was buying it for less than you could replace it for.
Yep.
It gave me an immediate return. Again, I didn't know anything about management. I don't know any tricks. I don't know what your question was exactly now, but
man, we're just rolling with it. You're doing good, man. We're just going.
But I made my decision on that deal because I'm chicken, man. I'm basically a coward investor.
What do you mean by that?
I want money now.
Mm-hmm.
I'm not
speculating,
dude. I'm not building apps here.
Right.
Okay?
You're investing. You're investing for today, and that's the problem. People are buying and speculating. They're like buying a stock. You're fixing and flipping. That's not investing. That's speculating. Go buy a mutual fund. That's the same thing. Those are two different things. Let's compare apples to apples. What you're talking about is I want a 10% actual cash on cash from day one, and then whatever happens down the road, the forced depreciation, that's in my pocket, bro. That's how I'm getting paid. People don't look at it that way.
Yeah, and because I don't know a lot about the space. Remember, I'm at that time I'm 34 years old.
Mm-hmm.
I have $1 million saved from my other businesses. My other businesses are pumping, dude. They're working. I'm paying attention to them, and they're grinding out. And I figured out how to make these businesses work. And so, and the third thing I was doing was I was shopping real estate. I wasn't reading books. I was walking properties.
Yes.
You know, what feels good? What doesn't feel good? Like literally observing. What's the difference between wood and concrete and steel casings, stairs, or wood stairs? You know, what you can't read about that in a book.
Right.
Mm-hmm.
What are the different neighborhoods and zip codes like? You know, what you start getting a feel of something, right? So when I finally saw this deal in La Mesa, California, or Vista, California, the property was called La Mesa, actually. It's these 38 units. As soon as I looked at him, I'm like, dude, I'm buying this deal. Now, the guy that was with me was a professional real estate guy. And he's like, man, I think the price is too high. I'm like, dude, I'm buying this deal. I knew like that quick. I knew. Okay. Now I put 350 grand on that deal. The first month it paid me $3,000 after the debt.
That's right.
After the expenses. And I thought, oh, maybe it's a phenomenon. You know, maybe we just got lucky the first month, or maybe the closing, there was extra money at the closing and they're distributing that money. But dude, the next month it paid me $3,500. And the third month, it paid me $3,000. I'm like, I'm going to go buy me another one of these deals.
I like this.
So I went and bought, this was the best return I ever had on money before. Okay. I put 350 grand down and I already had $10,000 of my money back. I'm like, dude, in 30 months, my down payment's back.
That's right.
See, that's how I buy real estate. I assume the worst case scenario. I assume that I look at deals and I'm like, I'm at 94% occupancy right now. What happens? Where's my break even? How low can I go, dog? And how long can I last? So if you're buying real estate, you need to ask yourself this question. How low can I go and how long can you last without losing it? So I look at how low can the occupancy go, okay? How low can the occupancy go to break even, to pay my debt, to pay my expenses, to fix the roof, to change carpets, all the problems? How low can I go so that I don't lose money? Because the number one rule in investing, as you guys know, Warren Buffett says, number one rule is don't lose money. Number two rule, go back to number one.
That's right.
Hey, I want to jump in real quick here because you were talking about you had some good money saved up. You're making good money with your businesses. Then you get into real estate and you're saying, because this is a snowball effect that I like to talk about. You're starting to grind it out. You're starting to make a little bit of money, $3,000 a month. Then I'm wondering, did the cost seg start to kick in and those things after a while? Because you're a high income earner, and then you're going to see, wow, I can accelerate depreciation on these babies.
Yeah,
and now I'm keeping more money.
I didn't know. Look, I didn't know anything about cost.
This is my journey too, and that's why I love it. I love to hear about this.
Yeah, but I didn't know anything about cost seg, which is, it's an accelerated depreciation scheme that people know, and it is a scheme, by the way. Okay, let's just call it what it is. But it's the beauty of real estate. So your audience, I don't know if your audience know what cost seg is, but I didn't know about that kind of stuff, dude. I didn't start using that kind of stuff until like maybe 5 or 6 years ago, 7, maybe 8 years ago.
Yeah.
I did my first cost seg, which is accelerated depreciation.
Right.
That's right.
Basically, one of the beauties of real estate, unlike my other two businesses, is there's all these tax advantages. You know, in America, the rules are written by lawyers, okay? And lawyers happen to be the guys in Congress. So there's this incestuous relationship between lawyers and Congress, right? They're basically making laws for the rich people.
That's right.
For instance, I'll give you an example, okay? The more passive your income, the less you're taxed.
That's right.
That's right.
The more active you are at your income, the higher it's taxed. So I don't know if it's a conspiracy against the working man. I don't care, dude. The rules are the rules. When you sit down and play Monopoly or Pokemon or I play this little game with my daughter on my iPhone, dude, I don't care who made the rules.
You got to play by them. That's
How
right.
do I win, baby?
Game. That's right.
How do I win,
That's
right?
right.
Because the rules don't know whether you're black or white or 17 years old or 71 years old. They don't know, man. They just know this cat's playing by the rules. And so we're going to reward him if he understands them.
Grant, two things my dad taught me. It's not what you make, it's what you keep. That's the first thing. And the second thing is not what you buy, it's what you pay. So if you can live by those two rules, I think you're going to be able to crush whatever you're doing.
Yeah, but let me just say this. I think your dad had a little bit of limited thinking right there, okay?
Yeah.
You know, because it is what you make, dude.
Oh, well, yes, but what I'm saying, it's not only what you make, but it's what you keep. So as far as the real estate with the depreciation and all that, at the end of the day, the government does these things. This is their rationale. They want real estate people to afford this housing because the government can't do it. So they're trying to give businesses an incentive to do it because they can't get in and build these. Have you ever gone and seen the SROs that the government's trying to put up? They can't do housing. So that's their excuse to give the cost seg and all this other stuff, to give I guess
stimulates the economy too.
Yeah, that's what they're trying to do. So I
don't know what their reasoning is. I doubt there is. I doubt it's for the good of mankind. So
I like to think.
But I just know. Look, I'm a simple guy. Okay, when I invest in something, my investments are all simple. I invest money so I can get more money. Period. Now, in my companies, these companies here where I'm writing books and coaching companies and building out Cardone University, that I invest money to make my products better so I can reach more clients so I can make more money. Okay. Mm-hmm. Look, at the end of the day, I want to help people. I cannot help people. Broke. Mother Teresa couldn't help people without having money. If Jesus Christ was here today, he would have a fleet of Gulfstreams. He would have his own studio. He would be streaming everywhere he could, right? So I need my business to be simple, okay? And I love real estate. I particularly love the multifamily deal because we are, and I think you guys would agree with this, becoming every day more and more of a renter nation.
Yep, I agree with that.
That game's not going to change. And I don't want to be at the high end, though. I don't want to be at the high end because everybody's got decisions. Do you want to go Section 8, government housing? Do you want to go $800 or $900 a month rent? Do you want to go $1,500? Do you want to go to $3,000? I don't want to be at the top end of this deal. And I don't want to be at the bottom either. Go ahead.
Yeah, no, with that being said, what's your investment strategy? Do you have a strategy or a framework that you follow? Because you're talking about you don't want to be Section 8. What is your specific focus?
My focus is, median, right there in the middle, okay? Like that doesn't get so affected. So a guy making $50,000 a year.
Yeah.
I'm renting to a guy that makes $50,000 or $60,000 a year most of the time. Now, the reason that's my target is because that guy doesn't know whether we have recession or economic parade.
That's right.
Nothing changes for him. Okay, literally, a guy making $50,000, you could go on hard times. He doesn't really know that we're having hard times, dude. Nothing changed.
Right.
Well, it's a C property. That's what you want, a blue collar worker who's going to be there, and he'll never leave. If you treat that guy like gold, he's never leaving that apartment. He's going to stay there.
I'm probably a level above C properties. I'm probably more like a B.
Okay.
You think a C property is $900 a month, man?
It all depends
on our market. It's
it all really depends. I mean, hey, listen, if you're in New York, a C property might be $900. In Tennessee, it's not. In Tennessee, it's a B plus, A minus. But it all depends what market.
And we fluctuate between. We go from C to like B minus. That's kind of our sweet spot personally. But that's cool.
Grant, how's your average hold time? Do you like to buy and flip these, or do you like to hold these things out and just cash flow out these babies?
Well, I take the worst case scenario, so I assume that I'm stuck with this deal for the rest of my life. I don't want to be selling in a cycle that's bad.
Okay.
I just wrote an article on LinkedIn about deflation and inflation and the effect of it on real estate. I think we're moving into a massive amount of deflation in the United States, contrary to what most people think, because they're buying gold and silver and think that we're going to inflate because there's so much currency been printed. But, I just assume I'm holding this thing forever. Now, that being said, my average hold time up into this last cycle where I made a bunch of acquisitions has been about 32 months. Shorter than I would have ever imagined.
Mm-hmm.
Now, I think that's going to go out, Gino. I think it's going to get longer for me because the age that I'm reaching and I'm becoming, I need capital less, okay? So some of my sales in the past have been just to generate new money to buy bigger products.
Yeah,
I gotcha.
So
I should have never sold the first 500 units I bought in San Diego. I should have never sold any of them.
Oh, San Diego is crazy. You can't even buy anything now. You probably tripled, quadrupled your money on those things because that's an emerging market. I mean, that just emerged like crazy. You talk about place that just went nuts. I mean, it's $800,000 for a single family house that's 1,800 square feet. I mean, we don't even look at that market. Unfortunately, it's something that you can't even forget cash flow. I mean, you can't even buy anything there now. So
but let me just say this, okay? And I was going to say this earlier about like I'd like to get a 10 or 12% return, but one of the mistakes that I've made, I should have, particularly in my situation, because I had 2 other companies that were working, I should have invested in lower return properties in better locations, because I would have made a much bigger bang on the exit.
Yep. That's
But I'm greedy, man. I'm not really greedy. I'm scared. I'm a scared investor. Okay, I run scared.
You're either getting it now or you're getting on the back end though too, right? So you were going for the immediate return, and instead of getting it on the back end where you could cash out for more.
I was just scared.
Yeah.
My worst case scenario, the worst case scenario can if you buy the way I buy, assuming the worst case scenario, you're going to miss really good properties because they're not going to pencil out.
But you're going to be in the game for the long haul, and you're not going to bust out. I prefer your beginning strategy, and that's what we're currently doing because we're buying for cash flow.
Yeah.
And if it appreciates, great. We're forcing appreciation every day. We got a framework. We go in, we do our little touches to it, and we force the appreciation. But you're not speculating at that point. And I think it's a more sound investment the way you've been currently investing than hoping for the big payoff on the back end.
Yeah,
but I think it's either way.
And when you guys say you're forcing appreciation, means you're improving the property.
That's right.
Yeah.
The NOI, net operating income. You're either getting the income up or you're getting those expenses down, a combination of both. And all of a sudden, at the end of the day, that's what multifamily is all about. I think that's one of the big differences between that and singles. And the other one is the financing. How are you financing your deals? Are you going all cash? Because I wanted to go into the Cleveland, Ohio market, call the broker up, and he's saying everyone from California and New York are coming in. They're buying all cash deals, 3, 4, 5, $10 million bucks. And I mean, all cash, and they're not getting any kind of discount. They're going to be getting 10% off the asking price. So how are you financing your deals?
Well, I think people are going to Cleveland because of LeBron. They
That's
just
right,
follow
baby.
LeBron around. They say, just follow the king, dude. Follow the king. So, I use, I don't pay cash for my deals. My deals are big. So I'm not walking around with $25 million, $30 million cash all the time. Plump. And look, the bottom line is, money's so cheap today.
Yeah.
So you got treasuries today at
getting
135, I think.
Yeah.
Maybe 140. I can buy a couple points over that. So I'm doing deals at 3.5% interest with 4 and 5 years of interest only.
4 and 5 years, Jake. You hear that? We're getting 12 months and we're thrilled. We're getting 12 months interest only. So
Did you just say you got what?
4 and 5 years?
Oh yeah, dude. I got
Damn.
5 years of IO on 56 million, 75% of 56 million, whatever that is.
Yeah,
So
you're
42.
not cash flowing on that, are you?
Oh man.
Yeah, no, but you see, here's the problem with that. Okay,
What's the problem?
This is synthetic. I mean, it's artificial. So I go into those deals. Those deals are going to do 10 and 14% from day one.
Because the interest only, right?
Yeah, which means though that the prices are getting elevated because the rate's coming down. So I can actually, and other buyers can justify paying a higher price because the rates came down. So if you're making decisions on cash flow now,
And
sooner or later,
lock for 10 years, right?
Say again.
You lock for 10 on those?
Yeah, I lock for 10.
Yeah.
Sooner or later, those 5 years are going to be up. Okay. So at that point, then it's not going to be interest only at 3.5%. It's going to be interest only and principal, but I'm going to be paying my debt down.
That's right.
My thinking is 5 years from now, rents should be a little higher. I know expenses are going to be higher. So you got to know what you're doing, man. You know, everybody out there that's thinking about investing. Okay, a couple pieces of advice I would give you is like, don't bother with 2 and 3 and 4 units. Just skip. Go to let 12 or 16 be your minimum number. You know, get to don't if you can figure out how to buy 2, you can figure out how to buy 16.
That's right. Don't you think, though, investors have to have some type of value that they got to give people? Because someone's getting into the space. They have no money. If they have experience on how to manage these properties, raise the money, go out there, get a partner, get some equity in the game, get some skin in the game. And that's how Jake started. Jake started 25 unit. He was a W-2 guy. I knew the game. I knew how to analyze, but he was willing to go out there, knock on doors, our first deal, start collecting. So I think that's how people got to start. And everyone's got, like you said, I had the limiting belief before, but that limiting belief, you got to shatter because you've got to create value. You've got to bring value to the table. And if you can't get it yourself, raise the damn money up and start the gig going.
You know, or the other alternative is you find somebody somebody that's doing like what I'm doing, and you ride on top of them. Now, this is not a very popular model because most guys investing in real estate at the level I'm playing at now, they're not putting any of their own money in.
Yep.
They're raising all the money.
Yep.
So let's say a deal's 30 million and they need 10 million down. That they go raise the whole 10 million. They don't have any money in the deal. What I do is I put the 10 million down, and then close friends, family, close employees, executives, they ride on my money. They basically buy part of my position.
Yes.
And just ride in my deal because they're adding value to me. And the value they're adding to me is they are passive, quiet, no problem investors.
That's
they reduce my position in the property. Look, I got a lot of money in real estate. Okay. Like every penny I have, all my net worth is in real estate. So me giving away pieces of deals, I'm still heavily invested. It's like a guy being at a blackjack table and he's betting 5,000 a hand, and you come up and put $50 on. Who you pulling for? You or him?
Right. Yeah, and
Pull
guys,
for him, dude.
What Grant's talking about is syndicating. A lot of, and we're actually in the same boat as you are. We raised all our money. You know, we got Gino's brother Marco gets in on some deals with us, but it's just us. We're not syndicating. What Grant's talking about is syndicating. What these guys will do is they'll raise the money, and then they'll get, say, 50% on the back end. After they reposition the property, they'll sell it. They won't put any of their own money in, and then they'll get 50% of the proceeds at the end when they sell it.
Yeah, and they're getting management fees and this fee and jack fee and fee and
exactly right.
Because they have to, dude. That's the only way they can make their money. In my case, when you're riding, I mean, this is the thing I would tell people to do. Look, if you have a main job and you don't really understand real estate yet, okay? Look for a guy like me or like you guys and buy a piece of a deal they've already done. Don't buy a deal that they're looking at. Buy a deal that they've already done.
Oh, that's a great strategy. Never thought of
then
that.
it's basically it's stable at that point, fixed, and you know what your return's going to be.
That's right.
Yeah, and say, hey man, do you have a piece of one of your deals that you want to sell to me? You know.
And then if that would have been you, say 10 years ago, and someone would have came to you and said, let me buy a piece of that deal, maybe you still have those San Diego properties because you sell a piece of them and you didn't have to sell the whole thing. So that would have been adding value to Grant and also adding value to the guy that's trying to get in. So that's a win-win. I think that's a great scenario to propose to somebody. Yeah,
because I think most people just don't have the time to do the homework.
It's a lot. It's a lot, man.
Grant,
I got beat up.
Grant, don't you stress commit, study, and predict? Isn't that what you stress? So, I mean, if you want to get into real estate, shouldn't you commit yourself to educating yourself before you give your money off to, let's say, Grant Cardone or somebody else? Because you really got to learn it.
Yeah, but I mean, look, I got a friend, Matt Monero, okay? He runs a big trucking company. They basically, the guy makes millions of dollars a year in his trucking business. Mm-hmm. For him to go start studying real estate would actually be counterproductive to him at this point.
Okay, that makes sense.
My twin brother invests in my deals. Okay, he's got no business being in real estate. He's got a company that they're building out right now that could do $100 million a year.
But they need to get in with a guy like you though, because it's going to help. It's going to reduce their taxable income too. So it's going to be great if they can get in. And if they have, I think what we're finding here is you got to find somebody that's reliable that you can get in with, that you can trust. That's not going to be a Ponzi guy. Right?
And the way to do that, the way to protect yourself from the Ponzi guy, the Ponzi syndicator, and by the way, there are a bunch of them out there. Okay. The way to protect yourself is, hey, how much money did you already buy the deal? That is the ultimate way to protect yourself. He already owns the deal. He's not buying a deal. Mm-hmm. Okay. People syndicate deals because they're trying to raise money to go get a deal. Mm-hmm. So if he's already owns the deal, like I own a deal I bought in Wellington, just outside of Miami. It's about 45 minutes outside of Miami. I put $10 million down in it, okay? My brother calls and says, hey, do you have any of your deals that you want to sell? Yeah, dude, I bought a deal a year and a half ago. I got $10 million in it. So he buys $1 million of it. Dude, he knows I'm committed.
That's right.
Right? So he goes to sleep at night and he says, I pray for my brother's investment to do well. Right? Because his money's riding on mine.
Keep rocking, baby.
That way you know it's not a Ponzi scheme, right? You know he's not going to steal from you, because if I steal from that deal, most of it's out of my money.
Right.
That's right. Sounds like my brother, Jake, huh?
Just riding the Gino wave, baby.
You got to ride the wave, bro.
Yeah,
And
ride the wave,
it's
man.
It's part of family. You got to take care of family. Grant, how did you build your teams for for real estate? I mean, who do you think is like the best team member as far as building the real estate and getting your whole ship moving forward?
Well, what I do is I focus on the things I'm good at. So I'm good at buying the deal. I know a deal. Look, I know when a deal feels right to me. I can literally do a Google search and know whether I want to buy that property or not. And I bought a lot of deals without ever visiting them. I tell you right
Elaborate on that, because that's a little subjective. Like, what is it that you see? You say, man, that's a winner.
Dude, it is totally subjective. My first test is a subjective test. Does it feel good?
The gut test.
There's a deal, 528 units in St. Petersburg right now in Tampa, Florida. I've never been to the property.
That's a hard market.
I looked at the brochure. I Googled it. I know I want to buy that property. I know that I want to buy that property enough to know when Thursday's the deadline, that I'm going to fly in Wednesday night, meet the broker, and I'm going to get that deal.
So you got to call to offers. Thursday's the deadline.
Yeah, I won't be part of the call to offers.
Okay.
I'm going to tell them I refuse to be part of the call to offers. I'm not going to feed your little freaking fire.
That's a great. I like that, Jake.
I do too.
And I'm done with them, dude. I'm done. They're just using you.
No, I know. It's they're just trying to bid it up where we go through it all the time.
Hey, man, even if you're not a player for it, man, just make an offer on it. Have you heard that?
Yeah.
Yes.
You know why? He doesn't want to tell the seller he only got 2 offers.
Exactly right. No,
Yeah, I got
biting.
7, dude. 7 of them. 5 of them are shit.
And
Right?
you know what we're finding is we're getting into these call to offers now. And we just did it was a little $7 million deal, 150 units. We got in. We're in third place behind 2 REITs in our market, right?
Yeah.
It was August, and basically they're like, nope, you guys are out. But they knew going into it the REITs were going to retrade $1 million, and the thing was going to fall apart. So I was at Gino's house on New Year's. We get a call from the broker. Thing fell apart, and so we're like, we're still there at the number. And we end up getting it done 2 months later. And it was like we could have saved all that time and BS because we came in at a firm number.
Dude, let me give you guys a little tip, okay?
Yeah.
When you're doing the deal,
Yeah.
ask the guy, hey, man, how many guys you got? He's going to lie to you.
Oh, yeah.
There's 6 guys. He's always lying. They always lie.
Yeah.
Okay? So then you just ask, what number am I right now? What number am I, man? What number am I?
Well, that's what he was telling us. We were in third place. That's what he kept telling us.
No. Before he picked, though. See, here's the deal. The guy had already had his guy, dude, before you guys put your bid in.
That's right.
They already knew who they wanted to pick. So before you go to the deal, before I even like this deal in St. Petersburg, hey, man, how many guys you got right now? 6. So I'm like, okay, how many of them are real, dude? 2? Who have you picked already? Who's your favorite? It's not up to me. Dude, come on, man. If it was up to you, who would it be?
Because they're pushing their guy to the front of the line.
Huh?
They're pushing their guy to the front of the
Sure,
line.
man.
Yeah.
Why would you pick me? Me and you have never done a deal before, man. I know I'm 6, 7, 8, 9, 10 on the list. Where am I at, man? You don't know me. You've never done a deal with me. Why would you take a risk with me? See, what I'm trying to do is move myself up the list.
Yeah. Well, you got to sell yourself to this guy as to why you're the guy.
Well, you got the credibility. That's the thing. We talk about that. We had the credibility with this broker. We already had 500 units in the market, so he already knew we were serious, and he already knew we were players. He saw strategy. The strategy worked, so it wasn't rocket.
So why didn't y'all go hard from day one, man?
It's the learning process. That's a good question. Why didn't we go hard, Jake? Explain now.
He wanted to go with us. He just said it was all about the offer. It was weird.
Yeah, dude. If you'd have said, "Hey, I'll give you 25,000 cash right here,
now,"
we
had 50K we were putting up to go down right then. We were going to do
No. I'm talking about a down payment, dude.
I know. We went hard when we did it on the second go around.
No, hard from before the due diligence.
Yeah.
Woo! Now, let me tell you a little trick right here.
Hold on, Gino. We did go though, didn't we?
Not hard before
you didn't go, dude. If you'd have gone hard,
No. You're right.
I tell my wife this all the time. You go hard.
You go hard, baby. She loves it when you go hard, baby.
So, dude, if you got what you can do is you can go hard, dude, and then negotiate your PSA, your purchase and sale agreement.
I got
That's
you.
right.
So there's a lot of stuff in that PSA, man, that changes things.
But Grant, you're flying in, right? You're going to go in. What's your pitch to him when you go in there? You're going to say, "Listen,
dude, my pitch to him is going to be this: Hey, man, look, you've never done a deal with me. Do you agree with that?"
I agree with that. Yes.
Good. Why would you do one with me?
Because I want a commission. I want to make money. That's why I want to get this deal done.
Yeah, but he's got 4 other buyers, man.
He wants someone that's going to get the deal done. That's
So
what he
I'm
wants.
going in there with a letter from the Fannie Mae. I'm going in with a letter from 2 or 3 other brokers that have done deals with me that say he doesn't retrade, he doesn't play games, he's a closer. Okay, I'm going to get a commitment from that cat to either sell to me or not sell to me.
I love
And
it.
that is Grant Cardone's sales training. Get it in writing, right? You're going to get the stuff in
Guys,
writing.
write that down. That is the best stuff that we've
Yes.
got on this entire call. Say that again, Grant. I want to hear it again. Letter from Fannie. What else you bringing? What else you bringing? Letter from Fannie.
It's all in the deal, bro. It's all in the deal. Okay, it's all in the deal you make.
Yep.
If you can't get the deal, you can't make money. You know, so like I bought a deal. There was 38 bidders on a deal. I knew I had 2 buyers the day I closed the deal. I knew I had 2 buyers. The reason I'm saying that is because if I got 38 people bidding on one deal, okay, tomorrow after I get it, 2 of them are still buyers.
That's right.
They would pay me a premium to have my deal. So I got to go check this St. Petersburg deal out. I know if it feels good, subjective, if it feels good, good, then I'm going to pursue it. Okay, then I got to do my objective. Does it meet my criteria? Does it handle my worst case scenario? Can I get to the lowest occupancy in the last 3 or 4 years? I use a trailing 12 only. I do not use a future pro forma. I never assume a rent
Buying
bump.
actuals.
I don't do any of the value add stuff. Oh, I'm gonna spend $7,000 and I'm gonna get back $200 a month. I don't do any of that, dude. My deal is simple. The world goes to hell. Will it cash flow?
So we're gonna transition a little bit because I think that definitely some of the value that you add to folks is your general business discussion, your motivation stuff. So I want to hit you with a few general business questions here before we
Can I ask you a question real quick? Are you buying Cleveland? Is that where y'all are buying?
No, we're
No.
in East Tennessee.
Actually, I have a student who wants me to fly with him and analyze the market. I'm not crazy about Cleveland. As far as populations, dropping. Everyone's talking about inner cities. Everyone's talking about all these inner cities getting built up, and I can't figure out what the attraction with Cleveland is because your population is dropping. It's a rust belt. It's a crappy.
Well, let's go to East Tennessee. Let's go to where y'all buy. Y'all in Tennessee?
We're in Knoxville.
Knoxville area, and we do kind of similar to you, but we have a few in like West Knoxville, and then we do submarkets right around Knoxville.
Yeah.
So
if you ever need some help on one of those deals, let me know.
man, I'll shoot you. I'll shoot it over to your assistant afterwards. We'll shoot the underwriting and show you what we just did.
Okay.
For sure.
Okay.
And we were looking at a $30 million deal, but we were bidding it at about 23, and we just couldn't knock it out. We couldn't get there with them, and they said they locked it up. But I think this is going to be one of those ones where it comes back to us again because they threw in a higher price. It's going to bust out in a few months, but we'll see. So we'll keep you in mind.
Grant, let me ask you a question. I'm about to move down to Jacksonville, Florida. I was down in Florida for 10 weeks with the family. Came back. I'm back up in New York 2 days. I want you to go back down to Jacksonville. What do you think about the Jacksonville market as far as it being a secondary market?
What everybody tells you about Jacksonville, it's hard to get out.
So once you get in,
It's Jacksonville, dude. Come on, Jacksonville, man.
Talk to me.
Bro,
We're
if you're Chinese, you're not going to Jacksonville. You're going to Miami. You're going to Orlando. You're going to Tampa, maybe not even Tampa. Think about world influence, right? The Europeans are coming to buy apartments in America.
That's right.
The South Americans are starting to understand for the first time, starting to understand the apartment business in America. We have never, ever in America in 100 years had other countries understand the way we buy the way we do rentals. It's a completely different business model in America than other parts of the world. So I wouldn't go to Jacksonville.
dun, dun,
Got that, Jake.
Dun, dun, dun.
I got to get out of New York, bro. So I'm fine. I got to get nice weather. I was driving a golf cart. I was loving life down there. I love the
Dude,
Florida.
why are you going to stop in Jacksonville, man?
I got friends down there. I just love it. I love the people in Florida. It's just a nice place.
He's getting away from that 6% state income tax in New York.
Well, that's just stupid, man.
Yeah.
That's my.
That's why I moved. I was from New York too. That's why I moved to Knoxville. I wanted to get lower state income taxes. Well, no state income taxes, and property taxes are like nothing here.
Yeah.
So, all right, let's hop back here. Grant Cardone, what is your best habit for success?
My best header?
Best habit for success. We're not playing soccer right now.
My best habit for success? I don't know, man. Shit. Get up,
kick down doors, make it happen every day.
get up, show up. Fucking wait for the magic, bro.
Bring the pain, make the magic happen.
You know, something's going to happen. Something's good's going to happen. You just got to show up, man. You know, go armed.
Yeah.
Be ready. have one in the freaking chamber.
Fill up the hopper. I got you.
You know, and keep looking all the time, dude. When it's bad, look. When it's good, look. Look good when you look bad. I don't know. Shit.
Maybe we got to get this guy rhyming here a little bit more. Get the Grant Cardone mixtape coming out. What has been your biggest mistake in business, and anything that you can relate to the folks to avoid?
Dude, not my biggest mistake was in real estate or just business, period.
Either one.
Not thinking big enough, man. I should have gone big from the get-go. You know, I was buying my first deal was, I don't know, whatever it was, you know. I should have been thinking about 300 units from the get-go. I should have been thinking about 3,000 units. I should have syndicated. I should have done earlier on what I'm going to do now, you know. It's the same work. It's the same amount of work. I talk about this in the 10X rule, okay? Like, it is the same amount of energy and work. So you can either go little, you can go medium, or you can go large, or you can go giant. It's the same work.
We like to talk about that with multis too, because basically in these bigger deals, you're just adding zeros on. It's the same thing. You're adding more units, you're adding more zeros to the offer. It's
same deal.
Same,
and I see people get all lost in the legal and the title, the doc fees. What is this? The PSA. Don't worry about it, man. Your lawyer and the bank are going to work it out. That's why I love Fannie and Freddie. Okay, I got one guy that I use with Fannie. I send him every one of my deals. I say, hey, dude, how do you see this deal? Me and him see deals objectively the same exact way. So it already feels good to me, or it doesn't quite feel good to me, or I know it's garbage. I send it to him. He confirms, dude, this is garbage. Grant, I kind of like this, but I'm like, yeah, I don't need that, right? I just looked at 82 deals to buy 3.
That's what's going on right now. I mean, the cap rates are getting compressed. It's hard to find a deal right now because it's heating up, and the deals like that were there 2 years ago aren't there right now. Yeah, and we've been seeing that.
And so just back to the mistakes. You know, I should have gone bigger. I should have gone faster. I should have probably built a bigger team. I should have borrowed money, not borrowed money. I should have raised money. But you know, it's all turned out all right anyway.
You're doing all right. You're doing all right for yourself.
Man, when I start doing it right, dude, this shit's going to blow up.
Well, it's not only that, too. We found the bigger deals that we get into, we're actually cash flowing better because economies of scale. Uh-huh. So, and that's another thing to throw in there when you guys do start to go bigger. What has been...
I got a deal right now, Savannah, okay? Yeah. Savannah. I bought a deal in Savannah. I've been through the second management company now. I'm probably going to go through the third one. It's 200.
Why is that? They're just not performing?
I don't know exactly because I don't know exactly. It's I don't know.
Okay.
But it's 88% occupied, and I'm still cash flowing.
Yeah.
So it was a $32 million deal I bought 2 Christmases ago. The other guy fell out. I was the only buyer at Christmas time. That's one of my little tricks, by the way.
Right.
Thanksgiving and Christmas, I'm a buyer.
That's right.
And I bought it for $29 million. It's not even doing good in it cash flows. So imagine when it does well.
Gotta fire that baby up. What project are you excited about right now?
What project? Man, shit, I got my hands full, dude.
Man, this is your chance, baby. This is time to promote. What do you got?
I'm excited about helping people, man. I'm in a position right now to help a lot of people. We have a tremendous social media reach.
Yeah.
I got a bunch of projects that are. Look, all I should do full time is invest in real estate. That's all I should do. But no, that's not what I do. Okay, I go off on this stuff. I write a book called the Millionaire Booklet. I'm very excited about this book. It's been translated into 37 languages. 37 or 47? 37 languages. There's only 47 books on the whole planet that have been translated that many times. I'm with the Quran and the Bible, dude. Okay.
There you go.
So wow. It's called the Millionaire Booklet. It's a $10 book. It's freaking awesome. It's going to make millionaires. I'm excited about this battle that I have going on with Google right now. They're blocking all my advertisements because the name of my products are the Millionaire Booklet, Playbook to Millions, make millions in business, make millions on the phone. And they're like, you can't promise people that. I'm like, dude, you can't promise people that. I can promise them that because I know how to make millions. So So I got this little battle going on with Google and Facebook right now. I kind of like that action. I got 2 beautiful kids. I love that deal. I'm starting to travel all around. I got a bunch of interest from other parts of the world. I want to help people. At the end of the day, if you say, Grant, you can only help people or you can only build a $1 billion real estate portfolio, I'll be like, I'm going to help people, man. It's just, it feels better, you know? The good news is I don't have to pick. I get to do them both.
So then let me ask you a question. I saw something on your Facebook talking about the haters. How do you deal with the haters? Because you must have a lot of haters out of that, because people just like to hate, and we're not used to it yet. So.
I just put this in their face. This was actually for them. I had a bunch of haters. I told Sherry, I said, man, I sure would like a model plane. A plane of my plane. A model of my plane. You know?
Okay.
Dude, look, the way to handle the haters is to it's not to stop and handle them, talk to them, or do anything to them. Dude, the thing to do, man, is to just keep flourishing and prospering and succeeding. And what do they have to do with your mission? Nothing, unless you turn around to pay attention to them.
Gino's got these chicks stalking him online, and not in a good way.
It's tough because we're not used to getting that reach. All of a sudden, you put stuff out, you put your heart out there, you put your love into the stuff, and people are hating on you for no reason. It's like, dude, I wrote an article. You don't like it, just shut up and move on. But
yeah, I wouldn't even respond to him. Me and Jared, we do this show called Young Hustlers, and I get notifications on my phone from YouTube comments. I probably should take it off. Anyway, last night I got the one that we did. What to do if you have $10,000? How to invest $10,000? Dude, there's so much hate on this one video. Waste of time. You wasted an hour. You never told me what to do. This was a commercial. You're a white boy that wants to be black. You're a rapper. It was like crazy, right? I'm like, what am I doing reading this? It is what it is, man. Look, when you start going this way, you're gonna get people that, say you don't know what you're talking about. It's all good. You probably don't know what you're talking about.
Anyways, Grant, this has been awesome. Really appreciate the time you took out today, and we'll look forward. Maybe someday we'll do it again.
Hey, you guys are awesome, man. Thanks a lot.
Thanks, Grant.